This is Headscap. Today we're going to delve into how to be a successful day trader, Vectors Part 2. Now, before we delve into the program, I would really appreciate if you can subscribe to the channel, share the video, share the channel if you find value in it. Also comment, like, and subscribe. Did I already say that? Yeah, subscribe. All right. So we were talking about vectors in the last video. We were talking about how the market maker open his position and leaving us footprint as a regular trader to see what he's planning to do. So if you see a green candle, it means 200% more buy pressure than the previous average of the last 10 candles. And if you see red vector candle, it means 200% more sell pressure than the previous average of the last 10 candles. Blue and pink means 150% more buy pressure or more sell pressure respectively. Now we're going to see the vector candles in a bit on the chart, and also we're going to see reversal candles and how to actually utilize this strategy. Furthermore, we're going to also delve into the 50 EMA, which is the exponential moving average. And also, it's a very important moving average if you want to catch a move and also, while it's brewing and you don't want to wait for the reversal signs. All right, so let's delve into it. So basically, we talked about vector candles. We said green, red, blue, pink, all the good stuff. So imagine you have a situation where you have candles like this. You have a candle like this, and then out of the bloom, all of a sudden, you have a green one. You have a green candle. Let's color it. And mind you, imagine that what we have here, it's a continuation on an extended upward movement. Yeah, and then you have a green candle. The next candle after it in this time frame, in this specific time frame, it's gonna be red with a wick. Wick, it's a tail that you're gonna have, like we talked about in the previous video. After the green candle, we're gonna have a red candle with a wick. Now, a wick is, mind you, as you remember, it's gonna be during the inception of the candle, the market moved this high, but didn't close here. It then went down. So it's a sign to tell you that the market maker actually trapped the traders. And then it closed here. All right, so this is a big sign if you're in the top of the extended move. If you have a green climatic move candle up, this is the candle that's going to make me feel, no, I'm missing out, and I have to enter. And then what happens? You have a red one with a wick. After this combination of green and red, what's going to happen after that? It's big reds or continuation of the regular candle down. So remember this combination. Now it can be also blue and red. Like instead of green, you're gonna have blue and red, or it can be green and red, green and pink, blue and pink. That's also an idea that you can have, that, whoa, it's going to be reversal, probably it's going to go down. This is a good place to short. So it's either this combination or with pink. So it's either this one or this one. So this is going to be 1, this is going to be 1, this is going to be 2. All right? Now let's move on to the opposite scenario. Imagine you have a really, 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 really extended move down. Like you have red, 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 and then you have what? And then you have all of a sudden blue. And mind you, this is an extended move down. It's not only those 3 candles that you see in the red. All right, so what's going to happen after that? If you see a combination of red and blue, or red or green, it's a sign that tells you, and especially with the wick, with the tail that you see here, it's a sign that tells you, okay, market maker going to move the price up. He's actually completed his move down. He trapped the trader. He made his money. Now he's going to open shorts Now this is a counterintuitive, like I said before, because while the market maker open longs, which is those red candles, on the green candles, the one that moves, he started to open his shorts and close his longs. So basically he's making money on both directions at the same time. Now another thing to say is that if you see a really big move down with the red candles, and then the last candle that you're going to see is not red, for example, instead of this red, it's going to be pink. Instead of this red, it's going to be pink. It's another sign. Why? Because remember, pink candle, it means 150%, not 200%. So it means that the sell pressure is getting lower. It's getting weaker. It means that, okay, something might break, something might change, so the market maker planning his next move. And then after that, after this combination, like we saw before, but just different combination, different position, different location in the chart, you're gonna see the price move up to recover some of those vectors. Because remember, vectors are actually imbalances. Why they are imbalances? They are point of value for the market maker. He wants to close those point of value in profit, so he wants to get back to them. All right. So after we saw that, now let's move on to 50 EMA. Now what is 50 EMA? 50 EMA, you're going to see it on my chart very, very soon, and you're going to delve into everything that we just talked. 50 EMA is the exponential moving average. What does it mean? It means it's the average of the last 50 candles, respectively, of your time frame. So if you're in a 5-minute time frame chart, it's going to be completely different location than the 20 minutes or 25 minutes or 1 hour. So depending on what time frame you're going to trade, so the 50 EMA is going to be different in a different location. Now, why is the 50 EMA is important? Because the 50 EMA is like the balance, the midpoint of the chart, of the range, and it's like a magnet. So if price moves really, really high, explode up, you bet that it's going to get back to the 50 EMA, and vice versa. If it's plummet down so aggressively, it's going to get back to the 50 EMA or to that area, to that region. The 50 EMA is like a magnet. It's an exponential moving average that a lot of institution uses, a lot of market maker uses. Why? Because this is exactly the midpoint of the range. So he wants to balance it. Think about it like homeostasis in your body, like when you sweat a lot, and why do you sweat? You sweat because your body temperature is really, really high, and in order for your body temperatures to retain its functional optimally, you sweat to reduce the temperature. So think about the chart as homeostasis. It wants to get to a balanced state before the irrationality starts again, because markets move irrationally. So the 50 EMA, it's a very, very good strategy that you can utilize with the reversal candle that we talked before, but you can also utilize it in a different kind of scenario. Imagine that you have an extended move down, right? And you don't know what's the market gonna do because didn't do much. It's sideways consolidation. What's gonna be the clue for you to enter, to see like a big change of the move? Volume. We talked about volume, right? Buy pressure and sell pressure. So if you have a situation like this, when you have red candles, and then this kind of thing that doesn't do anything, right? And then all of a sudden you have a green candle at the bottom, and it starts below the 50 EMA and closes either above it or at the 50 EMA. It's a sign. It's a sign that the market maker wants to change direction. All right, sounds fair enough, sounds logical enough. So if you see this kind of move, and mind you, I would definitely recommend you not to enter in the 1 minute time frame. I mean, maybe unless you have a very, very extended move down. But I would usually suggest you to look at the 5 minutes time frame, because that would give you a better idea and a better confidence and confluence. Why? Because the higher the time frame, the better chances you have of succeeding. All right. So if you don't catch the move, like the inception of the green candle, don't enter when it's right here high. Remember, we said that we talked that the candles like to get back to themselves, like to return, like to recover. So you wait for the move down to recover 50% of the candle, and then you move back up. You're gonna see it, and then you open here, buy, and let it run. You're gonna see it in a moment. Same thing we're gonna say on the opposite direction. Imagine that you have the 50 EMA. You have the 50 EMA, and then you have a move, you have candles, and then you have green one, and then another green one. And then at the top, you're gonna see a vector candle with a wick. All right. So we talked about this, right? We talked about this idea of reversal candles. And you might not be so sure. You might miss that move. Okay, that can happen. You never be all the time in front of the chart. So so you see something like this, price moves like this, and then all of a sudden you have a red candle. It starts above the 50 EMA and closes either at the 50 EMA or below it. That's a very good sign to enter short if you miss this reversal. If you miss this reversal at the top. Why? Because if you enter here, I'm not saying that it's bad, but you might be in a drawdown. Why? Because it's probably gonna go up to recover some of it, some of the top candle. So you're waiting for this candle if you miss this one. And you enter only after you see a move up to recover 50% of it, and then you buy to short position. Now let's delve into those scenarios in the trading view, and we're gonna see them in action. So here we are in the US tech chart, which is Nasdaq, on the 15 minutes time frame, as you can see here. Now those lines that you see, those different candles that you see, those are like the vector candles. The green one represent the buy pressure of 200% higher than the average of the last 10 candles. You see here you see here red, see here blue, and also here in a pink candle. All right, and you have the regular candle, which are the gray one and the hollow red. All right, so gray one means a regular candle up, hollow red means regular candle down. Simple enough. Our focus would be on the vector candle because those are the one who give us the clue. So as you can see here, in the 15 minutes time frame, we are looking right now at this point of time, we're talking about last Wednesday on June 24th. All right. So as you can see here, you have a down movement. You see here it's below the 50 EMA, which is the cloud, the purple cloud with the light blue line in the middle of it. That's the 50 EMA. Those other lines that you see here, those are like different kind of EMAs. We're gonna talk about them in an extensive manner in future videos, more deeply in the future videos, to understand what they represent and etc. But right now, for the sake of this video and the simplicity of the idea, not to clutter your mind too much and not to throw at you too many things at once, we're gonna look at the 50 EMAs and the vector candles. All right, so we have here a down movement. The price moved down, right? The price is below the 50 EMA. Then you see a climatic move down with a red candle. It wasn't that climatic, but it's a red candle. So price like to recover it. And as you can see, price recovered it and then went down again. Now I bet you that probably in here, in this area, let's put an arrow, we're going to see a vector candle in the smaller time frames. So let's look at that. Put here an arrow. Voila. You see, you have a green candle here. So you have an extended move down and then you have a green candle here. Let's get back to the 15 minutes time frame. All right, so we're back to the 15 minutes time frame. And then look what price did. All right, so price moved what? So price, there was a reversal candle on the 1 minute time frame, on the lower time frame. And then what happened? You see a green candle. Right? Green candle means what? Market maker wants to change direction. Now, if you see a green candle on the 15 minutes time frame, there is a good chance the price is going to move up after an explosive move down. the zone will be shifted by the market maker. And as you can see, price, not only did it give you one vector candle, they gave you two vector candles, and one of them was above the 50 EMA time frame. So okay, so we have that. So if you got into the 1 minute time frame, when you see a green vector candles at the bottom, you could have gotten yourself a very good position size, a very good location to open buy, and then you could have exploited the move of, let's say you entered at 29,000 and you exited here, you could have exploited the move of $600, $500 with a leverage of 2. That would have been $1,000 net worth for you. If you leverage even 3 or 4, you can do the math yourself. Talking about $1,500 to $2,000. All right, and then what happened afterwards? Price didn't do much. This was in New York, mind you, as you can see in the red box. Price didn't do much, right? Because in Sydney, the Asian session, they kind of like sideways, right? Didn't do much. London, not so much. And then what happened? You have a clue. What was the clue? This red candle. Because before that, you didn't have candles. You didn't have many vector candles. You have, green one, but they didn't do much. You didn't push price up. So it seems like a very, how do you call it, a trap. The market maker trapped the traders who thought, okay, it's going to go up. It's going to continue back up again. Nah, it doesn't do much. So you have the red candle here. Let's zoom in so we can see it more clearly. So you have the red candle here. Okay, and also you have, green candle. They didn't do much. I mean, what? A $40 move? It's not much for Nasdaq. They're trapping traders. And then you gotta take notice as well of the wicks. You can see here a tail, green candle, but without conviction, wick. Red candle with wick on the up, and then you have a green candle with an upper wick. So tells you that something might gonna change. Let's continue moving, see what happened. Okay, and then you have another green candle, but look, this one was with more buy pressure. This one was with more meat, was larger. But again, what? You have a wick. Wicks give you the clue that they don't want to move price up. What? You have 1, 2. Okay, let's see what else. What's gonna happen next? Okay, you have another gray one. Let's see. This is where the US brings open. You have a purple candle, a pink candle. Sorry, pink candle means what? Maybe price gonna change direction. And look what happened afterwards. Let's see. Another pink one, and then you see here a red one, a very big red candle. You see the red candle on the 15 minute of the 50 EMA? This one is a sell pressure. Now, if you caught that move on the pink candle and you saw, okay, price doesn't move much. I mean, they're probably going to change direction. You could have gotten yourself a very good move down. Okay, let's see. Let's continue. Let's see what happened. Another move down, another explosive move down. As you can see, they recover some of that candle. They recover some of that candle of the 15 minutes time frame. So you could have gotten yourself a bit, in a position, in a better position. Wait for the small retrace up. Okay, another big move down. Let's see what happened after. You have a green candle. If you have a red and green candle, what does it mean? A reversal. Reversal probably pending. Next, you have a blue candle. Okay, maybe they're gonna change direction. Blue candle, you have a gray candle. Okay. Now price finding support of EMA. It's a smaller time from EMA. We're gonna talk about it in future videos more extensively. So it found support. So it's probably gonna go up and recover some of it, the vector candles. As you can see, you see red and green. Those are the sign. If you go into the 5 minutes time frame, let's see what we see there. Okay, if you zoom into the 5 minutes time frame, you see extensive move down, exhaustive move down with the red candles, and then you see a pink one at the bottom. Remember what I said, pink candle at the bottom means that weakening of the selling pressure. So probably something gonna change. And I bet you that probably, let's see another example. Okay, so this is example of Dow Jones Industrial on the 5 minutes time frame. This one was taken on Friday. This one is in the session of Friday before the New York Open. As you can see, we have here beautiful formation of green and red, and you can see the wick here above the 50 EMA and above the 200 EMA, which is the white line. And then what happened? Price plummeted down. And then what? After an exhaustive move down, a manipulative move down, what happened? You have pink. You're starting to have at the bottom green and pink. And then what? You have pink and green with a really long wick down. And then what happened? Price changed the zone and reversed. So as you can see, the vector candles color give you the idea and the clues about footprints of what the market maker will do. Will it always be the case? Well, if you know where to catch the move, 90% of the 9 out of 10 of the times you're gonna catch it right. But you got to know where to enter. If you want to have a big move, you need to wait for free strikes down or free strikes up, like we talked in the market maker cycle in the previous videos. You can check that out. Alright, so that's it for today's video. I hope you really enjoyed the video. I hope you like it. Write in the comment what next you want me to delve into in more detail. And also, share the video, subscribe to the channel, and also if you want to be part of our premium VIP Telegram group, you're more than welcome to text me in the Telegram ID that I have in the description of the video.